This is the Friday, February 10th, 2017 version of the Market Plus segment. Joining us now is Tomm Pfitzenmaier. Tom, welcome back.
Thanks, Mike.
We did not have a chance to discuss the cotton market. Had a down week for the first time in quite a few weeks here this week. Was that just a little bit of a correction or something bigger?
No, I don't think that. I think that's exactly what it was. I mean, we had really a good export sales number again this week, and I think that's probably going to continue. There's a lot of talk about acreage shifting away from cotton toward beans, and another crop shifting to beans. So, like I said, a correction, but I still think you're going to move up there to 78 plus, probably.
Okay. 80 in the cards there, or are we going to need something outside?
That would be the top end.
Okay.
Yeah.
All right. So keep an eye on it, but expect that bounce back here in the next week or so. Do you figure we'll start to recover?
You're in a nice little uptrend in cotton, and even in those uptrends, you have little corrections, and I think that's what we've seen. There hasn't been anything that would tell you otherwise. So I'm fairly positive. Again, that's probably part of the bundle of commodities that the funds want to own. So
you bet. So speaking of ownership on the board, or selling on the board, hedging, we've got a question here from Dan in Prairie City, Iowa. He's on Twitter at DanDV3. He's asking, at what strike price would you sell December corn call options to add value to $4 hedges?
Well, if you listen to the show, I said I thought you had an outside chance of moving December corn up in the 450 range at the sort of the top end. So I'd feel fairly comfortable selling a 450 call. I'm kind of an advocate of selling calls and collecting premium, so I might be one that would be willing to maybe nudge that down to a 440. At this point, I probably wouldn't go any lower than that. Just looking at the risk potential that we have going into the summer. But it certainly is a good strategy. If to be honest with you, didn't look at where the 440s or 450s closed. But if you collect 10, 15, 20 cents a premium on top of that, and you get exercise, you're going to end up being forced to be short corn at 460, maybe 465. And in my mind, that wouldn't be a bad place to be forced to have some corn sold. So I like the strategy. It's just a matter of how aggressive you want to be on in terms of what strike price to sell.
Now, would you be looking at a similar strategy if I'm selling cash beans today to capture that market that's there? Is it worth going ahead and extending some of that ownership, buying a call option again, or selling a call against it?
We've been doing that. We've been selling 1220s, 1240 calls, figuring that we collect 20 cents or so. If beans rally so much that we're forced to have beans sold at 12.20, I think we can probably live with that. And if not, it's a nice little enhancement to whatever else we're doing.
Right. And so 12.20, I mean, so you've got a lot of room to rally on those bean calls.
Yeah, a lot.
Okay.
And you're talking about a $1.50 rally when you've got a huge carry out here, a big crop in South America, and a big acreage increase. So I'm just not that concerned about it. I mean, obviously you have to watch it, and you don't want to forget about it, because it can bite you. But I think the risk reward on it isn't too bad.
Speaking of big acreages, we've heard a lot of analysts, most are expecting that it seems to be that 86 to 90 million acres of soybeans, and to a lot of ears, especially ears in the I states, Indiana, Illinois, Iowa, 90 million acres of beans sounds pretty far-fetched. You talk with growers all over the country. Is it that far-fetched to go 89, 90 million acres?
Well, the problem with the I states is they tend to like to talk about corn switching. And I'm never a big believer that there's a lot of that goes on. So if you had a 6 million acre increase in bean acres, probably only a couple million of that's going to come from, if you look at how much wheat acres were down, winter wheat acres were down, a bunch of that I think is going to come from wheat acres. Like I said, some cotton acres are going to get shifted. So they may be right in that if all you're looking at is your area and everybody grows corn and beans, maybe not that much switching. But the bigger picture is I think you could have some pretty good jumps. And you look at the bean differ. I mean, new crop beans are have quite an advantage over new crop corn at this point. Yeah. Now, maybe at some point that's going to correct, and that's one of the reasons I want to kind of leave the top end a little bit open on corn. But Yeah, there's downside risk for sure.
Right. And you talk about the advantage that new crop beans have over new crop corn is there, but you look at the advantage of new crop beans over wheat, over a lot of other crops that beans can be planted in place of, even cotton, even with this nice little rally. And oh, boy, those numbers look pretty good to a lot of growers outside the Corn Belt.
And I go back to the little graph they had on the show showing the shrinking, the drought monitor shrinking. That certainly plays into anybody that might be considering planting beans in those what they like to call fringe areas, whatever that means.
Sure. But it means any place I don't live. You
Yeah,
know, I mean, that's,
right.
I think, what
Yeah.
fringe is.
Right.
Yeah. So we've got a question here. Well, and actually, we've talked about this pretty well. Gary is asking, what's an estimated 2017 crop year in corn and bean prices with trendline yields? We talked about it on the program on the corn side. On the bean side, what happens with 88, 89 million acres and trendline yields? That's where we get to that. Are you in the $6 and change camp for beans?
I'm not that, but I'm in the carry out in the $6 to $6.50 range. So, and I don't know that means $6 beans, but you sure could see an 8 in front of it at some point. I mean, that's a lot of beans, especially given the size of the South American crop. I mean, they're going to be up, what, almost 9 million metric ton from it? I mean, that's a lot of beans.
Right.
And
WASDE did show a reduction in Argentina's bean crop, didn't they, on Thursday?
On their corn crop.
On their corn crop. Okay,
Yeah,
beans were unaffected.
They didn't change their bean crop
Okay.
hardly at all. So,
Gotcha. And Brazilian beans actually went up, I believe, closer to or they didn't. Beans were unchanged in Brazil on the WASDE, is that right?
Yeah, well, they're off maybe 100, I mean, 0.1
Okay.
metric ton. I mean, it was
Okay.
pretty close to unchanged.
Gotcha.
But then the other thing you have to, we really didn't get into the geopolitical stuff all that much, but you have to think if you're China or a major buyer of beans and you got one of your suppliers is wagging his finger at you all the time about what a terrible trade partner you are, and the other one has got a cheaper price and they'd love to do business with you, maybe the finger wagger loses a little bit of the business.
Yeah. A lot of risks on the table, both on supply and on the demand side.
Correct.
The new crop bean market.
Yeah.
Question here from Brock up in Baxter, Iowa. He's on Twitter at Hanson Ag. He's asking, or he's noting, they're planting corn in Texas already. And he says early spring usually equals more corn. Do March futures above $4, are they not a bad move?
On which month?
March? H. That's March, right?
Yeah, March.
Yeah.
Yeah, well, like I said, I wanted to start December corn in 4 or 405, which would have March well above $4. So I guess I'd maybe bump that up a dime to 12 cents. But
Okay.
yeah, I mean, I like the idea. For
Okay.
Sure.
And with the pace of the very southern part of the U.S. already moving ahead, and as you mentioned, Brazil getting well ahead of the game in their corn plantings, does the acreage shift, is it not as big as people are anticipating? Do we still see 93, 94 million acres of corn?
Farmers like to plant corn. I mean, when it comes to, and I think Brock makes a good point. When you have good planting conditions, corn planters tend to roll. So, and you know, everybody's running around saying, well, we had great bean yields last year. We had pretty good corn yields last year too, with plenty of upside potential there. So, and I know corn price or bean prices are a consideration, but yield is too. And most of the people that got those fancy bean yields probably aren't plugging those in for next year. I mean, they're happy they got them. We've had a couple good years, but I'm not sure we're quite ready to put that in the budget yet.
Yeah, I don't think a lot of bankers are factoring in bin-busting bean yields on balance sheets.
Right.
Yeah. So final question here from Philip in Ontario, Canada. We talked about wheat. You did see we've got that nice trend moving to the upside. Phil wants to know, on the demand side, is there any hope? Is there anything incubating that could really spur that demand to the upside, or do we just have to chew through it with the prices where they're at?
I think you just have to, I mean, there's a couple things. Good quality wheat is going to sell pretty well. So if you've got good quality wheat, I think you're going to be in better shape. Feed grain wheat banging right up against DDGs and corn, and I mean, it's going to take a while to chew through that. And like I said, world stocks are pretty, the Indian crop was reduced. That's part of the reason the world stocks were down in the WASDE report. But other than that, there's really plenty of wheat around.
Ukraine and Russia still quality,
Yep.
good quality wheat
Yeah.
over there?
Yeah.
Okay. All right, so we're
Strong
fighting.
competition there.
Yeah. All right. So I lied. This is the real final question for you. We always like our analysts to define terms and phrases used in the world of commodity trading. The one for you to define, we talk about a lot on the technical side of trading. What is retracement? What does that mean?
Well, that's a Fibonacci term that if corn moves from $1 to $2, there's a tendency, there's actually three retracements. There's a 38%, a 50%, and a 62% retracement. Those are developed by Fibonacci, whoever he was,
Yeah.
that's a common occurrence. So I think a lot of people particularly watch that 50% retracement. In other words, if you rallied from $1, go up to $2, the retracement would be back to $1.50.
Okay. And then from there, you could expect another, if it's just a retracement, then you'd see a rally.
Right, a rally back to potentially, I mean, if you're in an uptrend, you potentially take the $2 back out again.
All right. Well, thank you so much, Tom. Really appreciate that.
Okay, thanks, Mike.
Please join us again next week when Elaine Cubb joins me at the Market to Market table, and we'll take a look at how a family business pours it all into home delivery. So if you find value in our work, please consider clicking the Donate Now button on our website. And until then, thanks for watching or listening. I'm Mike Pearson. Have a great week.